Hello friends of the Grey Rhino, happy to see you once again. A couple of videos ago, I was showcasing this company called Disney. Today, I'll be looking at one of its competitor, Netflix. If you're keen to review what I've shared at Disney, please you can go to the Grey Rhino in the YouTube and you can review the video once again. But for today, I'll be sharing about Netflix. So for Disney, it's a company that we like. How about Netflix? Let's have a look. But for Netflix, its revenue has been growing from 2009 to 21 at 27% per year. Its net income has been growing even faster at 37% per year. So these two numbers are fantastic numbers, a very fast rate of growth of Netflix. However, there's another metric that we look at, which is called free cash flow. Let me quickly share what is free cash flow. Okay, so free cash flow represents the amount of disposable cash in the business. So after lessing off all its expenditure, the amount of cash that is available for the management to be using to benefit the business and the shareholders. For example, you can use it to service debts, expand its operations, invest in additional assets, acquire other company, or pay out dividends. And it's very important for a company to have good, positive free cash flow. Let's look at Netflix. Netflix, for the past several years, has been having negative free cash flow, except for the year 2020, where it cut back its content spending because of the COVID. Otherwise, it's been having actually an increasing negative free cash flow. Why the discrepancy of its net profits and free cash flow? Let's have a look. Right, if you look at Netflix net profit from 2019 at 1.9 billion to 2021 at 5.1 billion, a big increase. However, if you look at the cash flow, the operating cash flow in 2019 is minus 2.9 billion. And in 2021, it is a mere 400 million. What is the reason of that? If you look at the two items I block out, you can see that the addition to content spend is a huge amount. And it's more than the amortization of content assets. So in the profit and loss statement, what is shown is the amortization. However, the actual spending in the year is actually the addition to content assets. If you look at it, the trend has been the amounts that Netflix has to spend on its contents in the current year has been more than amortization, which means it's more than the previous year. To put it in other words, Netflix has to be spending more and more money on its contents to retain and attract subscribers. To put into numbers, from 2016 to 21, the content spend of Netflix increased by about 20% per year. So how does Netflix fund its negative free cash flow? Well, if I look at its equity, the number of share counts, in fact, it remained pretty stable. That's a good news, which means Netflix has not been issuing more shares and dilute the existing shareholders of the shares of the profits. However, if you look at the long-term debts, it has been increasing pretty much over the last few years. This means Netflix has been funding its negative free cash flow through debts, which means it also has to be spending more to finance its debts through interest. And in the rising interest rate environment, this could be a headwind for Netflix. And if I look at it, another thing, price. Netflix subscription price has been increasing over the years. Originally, it's about $8 per plan. The basic plan has recently increased to about $9. However, its standard and premium plan has increased considerably over the years. And that's not surprising for a subscription business, which tend to increase its subscription price over time. To put into context, currently Disney Plus package is about $8 per month. Which means if streaming companies like Disney, Amazon continue to be rising up, it's going to pose a serious competition to Netflix. and Netflix might not be able to increase its price, or it might have to spend a lot more on its contents to retain and attract new subscribers. And that's not such a good news for Netflix. The next few slides, I'll have a look between Netflix and Disney. Although Netflix has been pretty successful in the developed countries like US, in the developing countries where the people are not able to spend so much on streaming, right, Netflix is having some trouble. For example, in Netflix India, it has to reduce its price to be able to let the people afford its streaming services. Disney, on the other hand, chose a different strategy. So it actually launched it at a low price, but complement it with advertising revenue. So if you look at this chart here, right, Netflix subscription package ranges from 149 rupee to about 649 rupee. Whereas Disney is only from about 33 rupee to 125 rupee, much cheaper than Netflix. And yet, it can be complementing it with advertising revenue. And then I think this is a much more sustainable model for the developing countries. Another thing we want to look at is also per dollar of content spending. How much revenue are Netflix and Disney getting? The higher the number, the better. Okay, for Netflix, per dollar of content spent, it can earn $1.19. That's what I'm talking about 2017, when Netflix has about the same number of subscribers as Disney, at about 100 over million subscribers. Disney, per dollar of content spent, they're able to have $2 of revenue, which is much more than Netflix. What's the reason of this? Well, the reason of this is because Disney has many other channels other than streaming to be able to distribute its contents. Netflix only has a streaming channel to distribute its contents, whereas Disney can distribute via movies, television, and streaming. For the same contents, it's going to have much more revenue source. And that makes it much more profitable per dollar of content spending. Even today, after Netflix has increased its price and extend its subscription base, which means it can amortize the same cost over a larger base. Despite of that, Netflix is only able to generate $1.68 of revenue per dollar of content spent, still less than the Disney of $2 revenue per content spent. And that puts Disney at a much more favorable position, much more profitable position. Lastly, let's take a look. Netflix and Disney has a slightly different strategy. Netflix does not have a library of intellectual property like Disney, and hence it has to develop a lot of new contents. Well, some of this content, like the Squid Game, could be very successful. However, there are also a lot of misses. And for all the contents that are not successful, which means it's wasted dollars spent on those contents. Disney, on the other hand, has a lot of intellectual properties like Marvel, like X-Men, like Star Wars. And hence, what Disney is doing is when you have a successful successful contents, it builds a series around it. Because already they have a fan, and the new series is likely to attract the same fan base. And that puts it at a much lower risk of an unsuccessful new content. And in this case, I would like Disney better as well. So, yes, no, or yeto. Will we be buying Netflix? Well, unfortunately, I will have to give Netflix a pass. Let me summarize the reason. The first reason, because of a negative free cash flow, and I really don't know when they can be turning it around, or maybe never, because of the increasing competition. And secondly, I think per dollar of content spent, Disney is much more profitable, and that puts it in a better position. So all in all, for streaming service, I will be favoring Disney relative to Netflix. Well, that's my own personal view. How about yours? Right. So I think it'd be very interesting if you can also be sharing your view. If you like Netflix, why? Or do you share the same view as me? And if you think this video is interesting for your friends, I hope you can like it also, and also to be able to share it with your friends. So all of us can learn together and discuss together. Well, so that's all I have for today. I hope you find it beneficial and have enjoyed this video. Okay, so to the next time, see you. If you'd like to be listening regularly to the Grey Rhino YouTube to gain more financial knowledge and also investment wisdom, do subscribe below to the Grey Rhino YouTube channel and remember to turn on your notification.